Best moving average setting. What is it? Moving averages are one of the most common type of indicators used for day trading, scalping, swing trading, and you should use them. They are very, very powerful. However, one of the most common questions I get is, Barry, what is the best moving average? And by that, they mean the best moving average setting. And I'm going to reveal it for you, the definitive, very best, I really do mean this, not just joking, the best moving average. So the most reliable one, the most consistent with regard to your trading. So here it is. All right, so as you can see, we've got Bank of America on here. And let me bring up my little drawing tools so that we can analyze this accurately. So, okay, we're going to use, and we could use any stock here. But there is another thing that I want to point out, and that is that we're using a daily chart. And that is very important, because the only reason that any moving average setting would be more reliable than another one would be if a lot of people are looking at it. That is the key right there. Write that puppy down, that the only reason that one moving average would be better than another moving average would be based on the number of traders who are watching that moving average. So in other words, there is no ancient Phoenician numerology that is going to give you, a magical number that is the best moving average. Or a lot of people, for example, use a Fibonacci number and think, oh, this is good because this one's going to be better because it's based on, Fibonacci. And of course, as we all know, the markets move in spirals like Fibonacci. The markets move like nautilus shells. It's just kind of ridiculous. But anyway, no. Fibonacci's got nothing to do with what a good moving average is. Ancient Phoenician numerology, common misnomer, is not important. Neither is Assyrian numerology or Egyptian or any others. So there's no magic to the numbers, the numerology, or astrology for that matter. Some people use astrology, and again, my opinion, but no. Not interested. So I'm a very practical person. I'm not into any of the mystical stuff. And I just say, all right, well, what makes the markets move? It is people trading, buying, selling, demand, price going up. Okay. And then maybe people take some profits, or it goes down a little bit, maybe some amateur short, and then the professionals come in and pump that puppy back up again. It's all got to do with the market participants, right? The people buying, the people selling, supply and demand. Money makes the markets move, not some sort of numerology. So since it's people and the algos that they program make the markets move, what is the moving average that more people use than any other moving average? Well, there's really two of them, but I promised you one. I'll tell you the other one too. But the most common one is the 50-period simple moving average. So that's right, the good old SMA. So let's go to it here, and we'll pull this little puppy dog up. All right, we'll change the period to 5 and saldo. And because we want to make some money, we don't want to make saldo dinero. We want to make a lot of money. And then what you want to do, is very important, is that you choose the right color. And so, of course, the only color that will work is pale turquoise. All right. Or no, we could do, you know what we could do too? We could do papyrus. Where is it here? Yeah, oops, it closed down on me. Of course it did, because it doesn't want me to get it. They're trying to hide it. This is the big money is trying to hide this color from me. So what you want to do is you want to choose papaya whip for obvious reasons. It's self-evident. Okay, and I'm going to make this for new traders, that's totally a joke. Doesn't matter what color you make it. All right, but what does matter is that it's an SMA and that it is 50. And so there we go. That's it. All right, so let's take a little look at it and see how the market responds to it a little bit. Go back, look at a little bit of history here, and I'll show you what I mean. All right, so yeah, Boom, 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 boom. All right, so let's just take a little look-see, and then let me explain a little bit more to you. So we see that, I'm going to use the cyan arrow for this, market came up, hit the 50 SMA there, and then came back up down. In fact, I'll do it this way. Came up to it, came back down, came back up to it, came back down, came back up to it, came way down. So what we can see is that, sure enough, bet you by golly wow, which is a professional trading term, obviously, the market is finding resistance at the 50-period simple moving average. Now, why is that happening? Again, is there anything magic about this number? No, it's just that a lot of people are watching it. And again, the reason is that it just happens to be that it is the most commonly used moving average by the most traders on a daily chart. So, muy importante, you cannot assume that the 50-period simple moving average is as effective on an intraday chart or a tick chart or a 5-minute chart or a 60-minute chart. No, because it doesn't have the same self-fulfilling prophecy as it does on a daily chart. So the other one, by the way, just to give you an extra bonus tip, is the 200 SMA. The 200 SMA and the 50 SMA are the two most commonly used moving averages, and therefore some people say, oh, well then it's just a self-fulfilling prophecy, Barry. That's all it is. And my answer to that is, well, what do you mean it's just? Take the word just out. Of course that's why it works. Why else would it work? A lot of people are seeing it. A lot of people are watching it. And so, yeah, that's why it works. Are you looking for something magical? So price comes back up to it. And as people are buying, they see, oh, Bank of America ran into the 50 SMA. And now people are cautious because everybody and their gerbil sees that. And they say, ooh, I don't know if it's going to go through this. So what do? They maybe take some profits, maybe get a little bit of amateur short selling in there, and it rides it down. People are cautious. They're not sure, they're not sure, they're not sure. And then finally they make a decision. Oh, you know what? I think it is going to break through. But we see that, again, it provided resistance and the market hesitated there before it broke through. Let's see what else we get here. Oh, well, same thing there, actually. So again, even when it does break through, what we see is, whereas before we saw, oh, it bounced off. Okay, well, when it does come down to it, now we see, even if it's going to break through, the market participants hesitate there. Okay, maybe they shorted into this, and then they say, oh, this is a good target. We're at a point of indecision. Lots of people watch the 50-period simple moving average. Therefore, I'm not so sure we're going to break through it. The profit taking, maybe some people actually buy off of this level. And then finally, it breaks through. But you see that hesitation, I call these hesitation levels, when the market does break through them, but not immediately. Okay, comes back, and actually we got the same thing again. All right, and so there you go. Market comes back up to it, and then big rejection. And then we just kind of consolidate around it for several bars before the market decides, yep, okay, we're going to go through it this time. So that is the best moving average setting, simply because, again, most people use it. The most people that use it, the most people are going to see it in order to take profits, in order to buy off of support or off of resistance. Or, the other thing too is, I get this, I got to address this. A lot of people say, well, Barry, why don't we use the 15 exponential moving average because it's faster? And that's always the reason that people give me, because it's faster, as though faster is supposed to be better. Faster has nothing to do with it. Faster is not always better. In this case, it's worse, because it's got nothing to do with fast and slow. It merely has to do with how many traders are watching it. And more people use the 50 SMA on a daily chart than watch the 50 EMA on a daily chart. And it's that simple. That's trading, my friends. There's nothing magical about it. It's all about determining what are the market participants going to do. Speaking of that, when you come into levels like this, which basically the 50 EMA is support resistance, then we have to look at timing. Right? When is it going to bounce off, or when is it going to go through? And for that, I've got my timing indicator, which I share for free to all of my viewers, which means you. And what we're looking for is there, hey, when along the time axis here are we going to get a cycle high or cycle low. So cycle high, cycle low, cycle high. And that has to do with the time. And very few people use the time axis on their charts. They're just looking at price. Well, price, yeah, sure, you should look at price, absolutely 100%. And that's your support resistance levels, and your 50 MA basically is providing you with price levels that you should be watching. But we look at the confluence of time and price. And that's it's so interesting. It's an old W.D. Gann approach to trading, the confluence of time and price. And yet people seem to have forgotten about it. They don't use it anymore. They just use price and candlestick patterns. They forget about timing. And, when you look at it, well, I just drew two rectangles there. So there's two axes on the chart, time and price. That's all we got to deal with. It's a two-dimensional object. So why would you ignore half of the information on the two-dimensional object? Again, trading is all about establishing a probability scenario. So if you ignore half of the information on the two-dimensional object, how can you expect to have a probability scenario? You can't. So go get my timing indicator. I give it away for free. For full disclosure, it is a common indicator already in your charts, but I modify it and turn it into a timing indicator, a market entry timing indicator. And hey, if you like this and you want more of this stuff, feel free, please subscribe to the channel. Would love to have you get more of the videos. Let me know you like it. And one more thing. If you have a favorite moving average, type it into the comments below. Be very, very curious what moving averages you're using, what moving averages and what time intervals, combinations you use. Type them below. Very open to hearing your suggestions, what's working for you and what you like.